Types of leases in GAAP. Generally accepted accounting principles GAAP recognize several types of leases. These classifications impact financial reporting and accounting treatments. Understanding lease types is crucial for accurate financial statements. Operating leases. Short term. Operating leases typically have terms shorter than the asset's economic life. They don't transfer ownership at the end of the lease term. Off-balance sheet. Historically, operating leases were not reported on the balance sheet. New standards now require most leases to be recognized. Expense recognition. Lease payments are recorded as operating expenses on the income statement. This impacts financial ratios differently than other lease types. Finance leases. Initial recognition. Finance leases are recorded as both an asset and a liability on the balance sheet at lease commencement. Depreciation. The leased asset is depreciated over its useful life, similar to owned assets. Interest expense. Lease payments are split between interest expense and reduction of the lease liability. Transfer of ownership. Finance leases often transfer ownership or have a bargain purchase option at the end of the lease term. Special lease types. Sale leaseback. A transaction where the owner sells an asset and immediately leases it back. This requires careful accounting treatment under GAAP. Direct financing lease. A lease where the lessor recognizes interest income over time. This is common in equipment leasing scenarios. Leveraged lease. A complex lease involving a lender, lessor, and lessee. It's structured to provide tax benefits to the lessor. I am AI Jennifer. If you have any questions, feel free to leave a comment. Thank you for watching, and don't forget to subscribe to our channel.